We've had problems with the VTF all day, and so initially it wasn't connecting, and I was hey guys, can you hear me? Let's see, can you still hear me? You should. Okay, all right. So welcome everybody. Hope you had a good weekend and a great start to your week. We got lots to talk about. Not really, but we do have something to talk about, which is the market. And the market is the most difficult market environment I've ever seen, I've ever come across. At least for swing trading, it is. As you can see, the Qs is downtrending on the daily chart with lower highs, lower lows. But this is not the really bearish downtrend that we look for. This is inside of a larger uptrend, actually. Basically, that's an uptrend, and so that's the Qs pulling back on the weekly chart. Basically, it's also not a very bullish pullback. This is a rounding top. We didn't make a new high or a significant higher high. Does that make sense? And so this is very, very messy. And then when you compare the Qs to the SPY is much more bullish. The SPY is at the all-time highs. I mean, just shy of the all-time highs by 1% or so, maybe slightly more than 1%, but almost just 1% away from the all-time high. And so we have a really sloppy market environment, and most swing plays last week did not work. Luckily, this is why I don't like you to cherry pick my plays. Because if you didn't have the HAE, you would not have had a nice week last week. But the HAE paid for all the losses and a little bit more too. Okay, as a short. But at any rate, so this has been a kind of a tough market environment, and I don't know where the market is gonna go. My guess is that we will be sideways for a while, and that if we were to drop, it will not be a severe sell-off. It'll be at the most to the prior low right there. If we were to drop, okay, on the Qs to $300, but maybe even 305, where the 200 MA is on the daily chart. The SPY, if we were to drop, again, I have no clue. Your guess is as good as mine. The SPY has a little bit of room, because if we break this pivot, then there's no support below. There would be no support below, all the way down to at least 380. But, you know, if you think about it, even if the SPY were to drop to 380, I mean, how much is that? 5%? No, I'll tell you how much that is. So that's $35. Well, that's, 7-8%. 8% maybe. So that's at the most. I'm not really expecting the market to drop. I'm expecting the market to chop around and go sideways, up and down, and then eventually maybe resume the uptrend. If you look at the Qs, this is what's been going on. So I don't know how big that day was in terms of percentage wise, but that was, a nice big up day. The next day, crash. The day after that, a big gap down, only to completely get bought. The day after that, a big gap down and closed at the lows. The day after that, a gap up. So, red bar, green bar, red bar, gap up. And then gap up and follow through. That was Friday. And then today, gap down. And we were down, the Qs was down, I think close to 2% today. 1.8 maybe. And then rallied into the close. And so it was only down like just over 0.5% by the end of the day. But the point is, it's been really choppy, and most swing plays got stopped out, and some of them I just feel bad about, like the HL. I saw that today. Remember the HL? I called it as a 1, 2, 3 right here, breakout plus 1, 2, 3. When I saw the gap, it gapped, pulled back, filled on the way down, closed at the lows. I raised the stop, gap down, right? Never really took out the original stop, and look where it's at today. And why did that happen? Why? Because of the sloppiness in the market. Fifthly, is another example. But Fisley hasn't really followed through anyway. As a short, triggered here short, next day stopped out, the day after that came right back down. The point is, it's been too sloppy to swing trade, and that's why I'm now focused mostly only on the longer term plays with big stops and larger patterns behind them, so that I'm not gonna be taking as many paper cuts as I did last week. Oh yeah, sorry to hear, Diego. That was like amazing because we added to it. So there's the short right somewhere here, and then under the doji bar short, and then so we added to it, got to target 160 and target 2 50, and it got to 50, got to 49.26. So it was amazing. I mean, we got lucky that it gapped down. Sometimes you pick the target, and the target was the 200 on the weekly. I kind of just guesstimated where it would be, and then also the top of that base is support. But the point is, sometimes you pick the target based on the chart, and the stock just never gets there. That happens on most plays. In this case, I feel like we got lucky because it gapped down to target 2. So really, if I had missed that, I would have had a pretty bad week last week, because most swing plays stopped out, long and short. Right, long and short. The problem with we like volatility, but we don't like it to be like this. Huge red bar, all the shorts plays trigger, all the longs stop out. The next day, a huge green bar. The shorts that triggered the previous day are now not doing too well, right? And then the longs may have triggered. The next day, a gap down. The longs that triggered the prior day now probably stopped out. So that's like the worst kind of market environment for swing trading. It's even difficult for day trading, to tell you the truth. It's been pretty tough, even for day trading. And so, I'm going to take it easy going forward and only focus on longer term plays. So what did I call today? Let me show you what I called. Only 2 of them triggered. And one of them didn't trigger. I mean, it triggered earlier, but I didn't get filled until I got skipped. So EPC, actually I called this play long right here as a 1 2 3. Now it gapped above the entry and never filled me, and I put it out in the newsletter that I didn't get filled, and I actually stopped out. But again, I never got filled, so I didn't get stopped out. But what do I like about it? The monthly. It's a really nice monthly chart. So I have a nice weekly too, 1 2 3 on the weekly. So I have a call on this stock if it takes out the highs with a stop down here. Look at the size of the stop. It's got a great daily chart and a great weekly chart. 1 2 3 on the weekly. That's a 1 2 3 play. And a better monthly chart. Transition A on the monthly. Exactly almost the same. EPC, the INGR is exactly, looks almost exactly the same as the EPC. Monthly also transition A. So here's the EPC, here's the INGR. Okay, and INGR triggered today, so we'll see. Okay, stop under this green bars low. KALV is the weekly buy side. This is the one that triggered also today, but I didn't get filled until later in the day, and I'm giving it down to 23.80, I believe, or 60 maybe, somewhere here. Basically, I'm giving it close to $3, so I don't get shaken out, right? So this one, it triggered at the open, but I didn't get filled. It must have like popped hard quickly, so I didn't get filled, but I got filled at the end of the day, almost like here somewhere, because the order was at 26.50 was the entry, 51. So it pulled back to that area, and that's when I got filled. But otherwise, I actually didn't get filled on the initial move. So these two triggered. The EPC will be good for tomorrow still. TRVG did not trigger, will be good for tomorrow. Here's the TRVG. Again, another larger time frame play off the larger time frame, which is the weekly chart, weekly buy setup. The same on the fill, because somebody in the room asked me, if I got filled on the KLV. And I said, wait a second, let me look. And I looked, I didn't see it as an open position. And then later on, like literally 15 minutes later, or maybe 30 minutes later, I saw it in my account, and I'm like, oh wow, I just got filled on it, on the KLV. At any rate, so this will be good for tomorrow. These two triggered already. This is good for tomorrow. And AYX is good for tomorrow, though I don't think it's gonna trigger. But if it comes down all the way there and triggers, it'll be good for tomorrow. Here's why I like the AYX. Monthly is, I mean, there's no support all the way down to, there's a congestion there, so that would be the support. So, and it's also a big base on the daily chart. So base breakdown, monthly looks good, weekly looks good. So this will be okay for tomorrow too. So we'll put it on the list for tomorrow. EPC will be good for tomorrow. This one triggered already. KLV triggered already. This one will be good for tomorrow. And then the ODT popped. So yeah, it didn't trigger, luckily. So cancel that for tomorrow. Okay, did not trigger. And now the ODT was an open play, and it didn't work. Basically, the ODT was an open play and didn't work. But today I was supposed to add to it, and that didn't trigger. Okay. Here's the open plays. Atom has been open. I mean, been in it for a couple weeks now, and it's just better than break even, like by 20 cents or so, 30 cents. It was looking really good. Couple times we had, this day we had a pretty large gap down our favor, but my target was $10 on it, and it's not dropping. So lower the stop on this. I had it at 51. I'm gonna adjust it to 54 over the bars high, which is the weekly bars high. So adjusting it to 1554. Okay, the stop, the entry on it was 1550 something. So it'll be break even on the Atom if it trails us out. GTT, I don't know. I picked a couple of things that were looking good lower, but they're not moving, and so this is one of them. It's not moving. It's been a waste of time. Doesn't really look good either. Stop is at 160. I'll keep the stop at 160. And then RTP, this one trailed today. RTP, I think, not quite break even, but wasn't much of a loss either. It's a SPAC, I guess. I think, I don't know, it's not moving. It looked lower, but it's not moving. And REGN is a longer term play. REGN is a long term play, and we'll see. It's a monthly buy setup. So REGN I have in my brokerage account, and I have also in my IRA account as a long term play. Like it a lot. It's a monthly buy setup. But I will not be raising the stop anytime soon. Just gonna let it play out, basically. Okay, so those are the couple of open plays, and then the trades that triggered today, the INGR and the KALV. And for tomorrow, we know there's gonna be two open. Those are orders from today that I'll keep open for tomorrow. Other ideas that I have for tomorrow, but I'm not doing the swings. If it's just a swing play with a tight stop for a couple days, I'm gonna pass on until the market takes direction, until a trend forms in the market, or I feel like it's not as choppy, or I have a better idea where it's going, where it's headed. Then yes. So ACAD would be over the base there as a transition A on the daily chart. It honestly doesn't look that good on the hourly. And we'd have to take out all of this before you get in it up here. So this one doesn't look that good. Okay. Next on the list is the AGS. AGS triggered today already as a daily buy setup. It looks good because I feel AGS is also, this monthly isn't bad, and then the weekly isn't too bad either. So AGS triggered already today, but it was just as an idea, listed as an idea in the newsletter today, not as an official play, so I didn't do it. But it actually triggered. Looks good for tomorrow over the SPARS high, but only if you feel sure that the market is higher, and I don't. AKBA is a transition A on the daily chart, so we'd need to take out about 350 or so. Today's high looks alright. The transition A on the daily and the weekly, I would say. AKBA, AMC 1 2 3 4 on the daily chart. So long over today's high. Stop right here. Target, crazy, huh? Target up here and maybe even $20. Maybe on the AMC, but I'm not doing it. You didn't get filled on the INGR? Alright, I did get filled, and I got filled the whole position. I mean, the entire position got filled. It's a $97 stock, so you have to give it a little bit of room. You have to give it like 20 cents or something like this to make sure you get filled. Hey, what was the exact entry on it? What was it supposed to be? 97.25. I just want to see where I got filled. Oh, okay. 97.27. Perfect fill. Yeah. So yeah, I don't know. I got filled without any problems. In fact, it dropped initially below the entry, and then it just rallied back up into the entry. So I don't see why, unless you check the order to see if you might have messed it up, or maybe the limit was way too tight. Not sure, but that filled me. So we talked about the AMC. ASO, I like. It's at all-time highs on the ASO, basing every bar since inception. I mean, since it went public, or there must have been some kind of a spin-off or something like this, but my other platform does not have any of these bars. Basically, it starts on this day, on this bar, October 2020. Every single bar has been green. I don't know that the next bar is going to be red. It's unlikely. So I like it higher over the base, and in this case we would also be giving it a lot of room to make sure we don't get stopped out simply due to the craziness in the market. So I like it. I almost want to do it, tell you the truth. And if you look at the hourly chart, it looks good. That's the hourly time frame. So over the base, could put the stop under it, but because of the craziness in the market, I would be putting it there. Not too sure, not 100%, but I like it. It's just that it's such a big stop that I don't know it will make enough money to do it. A CAT is a weekly 1 2 3 and a daily breakout, CAT. It looks good on the weekly chart as a 1 2 3. It's also been in an uptrend for a long time. So if you look at the daily, that's not a breakout I would normally take. I only take breakouts that have a really tight straight base. I mean, that's not a very tight base. But I wouldn't be playing it off the daily chart. I'd be playing it off the weekly 1 2 3 with the big stop. So the entry for this would be over 245.78, stop 234.57. So this is a $9.50 stop, $9.80. Okay, looks good, but it would be more of a long-term play. Okay, more of a long-term play. And then CCJ also, this looks better, is a 1 2 3 on the weekly, but it's a bigger stop. I don't mean bigger in terms of like dollar amount, but percentage wise, for sure it's gonna be bigger. That's $2. That's 10%, more than $2. In fact, it triggered today already, so it would be over 240. Stop under 1870. So it's more than a 10% gap stop, but it looks really good. CCJ, as a long-term play. Well, I'm looking at the monthly here. Give me 1 second. I'm gonna check the monthly on my other platform. Oh yeah, I see it. Yeah, it looks higher to 25, but I don't like the fact that it's into all of that resistance from a few years ago. That's from like 8 years ago, 7-8 years ago. So I don't like that part about it. I think it's headed towards 25. Okay, not sure that I'll be playing it, because even if it gets to 25, that will only be 2.5 to 1. Yeah, that will probably only be 2.5 Rs to 1. Yeah, so not a huge play. CCRN is a daily buy setup, very, very bullish, and nice hourly chart. I don't normally pass on something like this, but my biggest concern is the market. I don't want to get triggered into something only to get stopped out on it the next day. But that looks really nice. And again, normally I would take this one. I would normally take it, because look at the hourly chart, and the daily is very, very bullish. It's a little bit extended away from the 20, but like the hourly a lot. I would normally take it. I don't think I'll be taking it tomorrow. Okay, I'll probably be putting it out as an idea in the newsletter, but not as an official play. The GALT as a long over the base. Stop, not sure. Could put the stop right here, which is normally where I would put it, or down here. If we put it at 350 by 450 by 350, that's a dollar stop. It gets to 550, the prior high, that's only on 1 R. That would only be 1 R. If we put it at 415, it'd be multiple R's, multiple reward to risk. But the problem is again, I'm not going to be using tight stops until the market cleans itself up and gives us a better idea. It gives us a clue where it's headed. Okay, so I don't think I'll be doing that GALT. GME, I had a call on it over here somewhere, but it didn't trigger. Came in, didn't look good, but now back up and has a lovely weekly buy setup. I bet you this is going to work. But having said that, I don't like the daily time frame, and the entry would be over here, over the red bar's high, stop all the way down here. I mean, it's too big of a stop. Entry over 188, stop under 136. That's just too big. That's $45, and then target 275, maybe 250 and 350. So GME and AMC both look higher, but I'm not gonna be playing either, at least not right now. They're just watches. HNST looks kind of interesting. HNST, if you look at the, is that the hourly? Oops. HNST. So here's the hourly. Yeah, it's a climactic buy setup, sort of. Long over 1623. Not sure. I'm gonna pass. And then IHRT is very similar to the CCRN. Nice hourly, daily buy setup, a little bit extended, almost the same. Looks good. Looks good. Problem is the market, but looks almost identical to the CCRN. I'll probably have them in the newsletter tomorrow as ideas, probably. Okay. And JNJ, I was in it and I killed it, but looks good as a long-term play. JNJ is the vaccine play. Looks higher, just looks higher. Okay. The entry for this doesn't really have an exact pattern, but just over the double top right here. Stop right here. As a long-term play, JNJ. You know, I don't have it on the list, but ABV also, ABBV looks pretty good higher. Not on the daily, but look at that monthly chart. I mean, it's just breaking out. Looks beautiful. ABBV, another biotech stock. MAC is a daily breakout, is a real estate stock, I think. Daily breakout. Weekly, that's a weekly breakout, daily breakout, and then monthly transition A. Looks alright. I think it looks decent to try it over the base, but I'm gonna pass. And then some of the oil stocks look good, like the rig. Weekly 1, 2, 3. I mean, if I'm sure about any of these, I'm most sure about the rig. Over 421. Stop under 352. But do the R to R. I mean, do the math on it. It's not very high. Unless, which it could very well, get to $6 or so. If that's your target, then it does have enough reward to risk. If your target is the prior high, then it doesn't. It wouldn't have enough reward to risk. Over 421 by 350, that's a 70-cent stop. So that's it. So 420 to that's over 650. So that's $2.30 divided by how much did we say? About 30 cents. So $2.50 divided by 30 cents is about 8 to 1. So it has plenty of reward to risk if you think it's headed back up to the 200. If you think it's only going to get back up to here, probably not enough reward to risk. There's also the PAA, which I like a lot. I mean, that is a beauty. PAA, but I probably triggered already. It's another oil. Yeah, it's already underway. Big pattern, big base breakout. You know, so I like that weekly a lot. But I let it go and it's going. Looks higher. So rig, I'll put it on the favorites. I would only do it if I thought, you know, it was going to get to the 200 MA on the weekly. $6, 650, and the prior high from last year. But I'll have to look at it on multiple time frames. And then TRVG we talked about already, over 385. It's a weekly buy setup. Looks good. The issue with it is that the R to R is pretty low. So here it is, long stop. We're using the big stop, and then where's the target? Is it this right here? That's not enough. Is it here? Okay, then we might have 2 to 1 if it got to the top of the topping tail. So this is a little bit low reward to risk, TRVG, but I like the setup enough to do it. ADVM looks really good short. Reminds me a little bit of the HAE, because the HAE, the same thing. We played it long initially, and then we took a stop on it. We didn't stop, but I raised the stop and it trailed out. And the same with the HAE. Initially tried it long and it didn't work. And so killed it and then shorted it because it looked low. So the same here. The problem with the ADVM, and the reason why I can't do it, otherwise I like it a lot to play short, is the fact that it's at the all-time lows. I mean, it's close. Yeah, that's 280. I don't know what the all-time low is, but it's basically close enough to support that I don't think that's gonna fall apart like the HAE did. Otherwise, the pattern looks good. This is a breakout failure. Tried to go higher, and the green bar turned into a topping tail bar. So that's actually pretty good. But the reward to risk on it, since it's at support, close to support, is not very high. The ARRY as a short, I'm not too sure. You know, under today's low. I wouldn't do it under the whole thing, just under today's low. So let me just double check. So that would be 1354 as opposed to 1322. So you save yourself about 30 cents. If you do it under today's low as a breakdown. Looks decent. Looks alright. Gonna probably let it go. And then AYX, we already have it on the favorites. I don't think that's gonna trigger, but if it does, I'll be in it. IONS, IONS, is a daily sell setup, a bit extended, but it looks nice under today's low. Stop above today's high, so under $37 by 38.66. Looks lower. The stock covers a lot of ground, moves a lot. Oops. So at the end of 2019 was a $100 stock almost. Oh no, 86. Looks lower to 30. I think 30 is where it's headed to. Very weak. IONS, and then MDLY is a 1, 2, 3 on the daily chart. Not too crazy about it. PLT is a 1, 2, 3 on the daily chart after a professional gap down. Not too crazy about it either. It's got support at 25. Okay, and then POSH, oh, this looks good. POSH. We don't have small bars, but it's at the all-time lows here, under support. Look at that really bearish gap right here this day. I think it was a secondary, but it worked anyway. So this one looks the best as a short, except that the pattern is not very tight. The base, we don't have a base right here. If we had a base, sure. We don't have a base, so short right here under the entire thing. Stop over the green bar. This is called a bear sandwich. The bear, I believe, or bull sandwich. So the bears make a sandwich out of the bulls. When you have a big red bar, big green bar, it's like a hamburger, right? And then a big red bar. And if we had another green bar, it'd be like a cheeseburger. So that's a bull sandwich. The bears make a sandwich out of the bulls, basically. It looks good short. I might do it, but it probably has a big stop because the bars aren't very small. You know, but I'm putting it on the favorites. And then SDLB is a 1, 2, 3. SDLB, I'm not sure. It looks good. Under 337, stop over 363. This stock is down a lot, so yeah, it's got support below, right here at $3. Not a lot of room, though it looks lower. So a couple shorts, a lot more bullish ideas or watches. What I do is I just put them in here, plug in the numbers, the entry, the stop, the targets, and then it calculates the reward to risk for me. This is a formula driven sell, and then based on that, based on whether I like it or not, then I decide whether to do these or not. So I'm gonna put in the entry, the stop, the targets for the ideas here, and then see what the R2R is for each, and then make a decision based on that. Okay, but that's my list for tomorrow. Questions? Laser. Let's take a look at the laser. It looks higher. That's a pretty good. That's a pretty good shakeout right here. The problem with it for me, the problem is, okay, you play it right here long, right? You put your stop right here. What's your target on it? Meaning, what's the R2R on it? Even if it did work, what's the R2R on it? To 25? That's not enough. No, even if it got to 30, it wouldn't be a huge reward to risk. It's a big stop. So that's the issue. So if you trade like I do, looking for reward to risk rather than percentage gain or loss, then I don't think this would make sense I don't think it would make sense to do this one. Okay. Otherwise, it looks good. If you have a setup that has not triggered yet, either a buy setup, sell setup, 1, 2, 3, and the price goes sideways for a while, at what point should we give up on the play? When the chart no longer looks good. Let's just say, I'm looking to play something that is basing on the daily chart, like so. It's basing, okay? And the moving average, the 20-period moving average, and I made the call on it, one of these days, like right here, made the call on it, and then the 20-period moving average catches up to price, and then it doesn't break out off of the moving average. Instead, it now actually, because it continued to base, the stock continued to base, the moving average is now above it, above price. At that point, I just would cancel it. But as long as it looks good, and I don't care if it's been 2, 3, 4, 5 days or not, I will still play it. But the moment I feel the pattern is no longer valid, doesn't look clear, then that's when I pass on it. Okay. NGD, yeah, gold today, especially the gold miners, up 5%, I think. And we had the HL and we had the pass, and both of which stopped. The pass, okay, that crashed on earnings, so there was no way to save this one. The HL, if I hadn't raised the stop, we would still be in it. So, okay, NGD, let's take a look. That's gold, it looks good. Big stop though. You have to give it the room, but it looks good. It's a monthly buy setup too. So it triggered already today right here. Stop, that's the tightest stop you could use. Is $1.70, or safer would be even $1.62. But it looks good. I like it. Diego, like it. Alright, HBM. Let's take a look. Where is my... Here it is. HBM. No, hold on. HBM is a retail, no? Oh no, it's not. It looks good. I think it looks good. It's a daily buy setup. Over the SPARS high, which is what? 835. Stop under 785. That's a 50-cent stop. Target, maybe 925. So we said how 50-cent stop. So 830. Oh, it has plenty of reward to risk. It has good reward to risk. Looks good. I like it. I like the HBM. Entry over this bar's high, stop under today's low. Looks decent, I would say. Okay. Could you explain again how far from the target you start to trail the stop orders? Hey Christian, how are you? So there's two ways. If the stock is very close to target, like 10% to target or so, 10-15% to target, then I start going bar by bar on the 5-minute chart. Okay. So if the play is very 90% to target or so, okay, 10% of the price. I'm not sure what that. Yeah, so here it's like, let's say the target was, entry was $10, just to keep the math simple. Okay. Target was, I don't know, $11. That's a $1. So that's a $1 target, right? 90% of it would be 90 cents. So at 10.90, if the price is currently at 10.90, then I go bar by bar on the 5-minute. But I don't really take out the calculator and I say, well, it's 10% away from the target, then I gotta go 5-minute bar by bar. I just eyeball it, and if I see that it's pretty close to target, I go 5-minute bar by bar. Okay. But if you can, somebody said if it's 90%, to the destination, or has covered more than 90% of the journey, this is maybe an easier way to think about it. If the stock is traveled from the entry to the target 90%, so, and what's the difference? So target minus entry would be $11 minus $10, $1. 90% of that would be 90 cents, obviously. That's why, I just, to keep the math simple. So 90 cents plus 10 gives you a 10.90. You go 5-minute bar by bar. Okay, but again, we don't want to be like this. We don't want to be too precise. We just, eyeball it, and you say, okay, this was my target and it's pretty close, like right here. Okay, great. Let's go 5-minute bar by bar. All right, especially if the play is running up a lot or dropping hard. That's the key thing. Is if the stock is is not moving much, like, you know, it's just grinding a little bit. But if it's running, if you know, it's going up, down, and it's very close to the target, that's no problem. You don't need to trail it tight. It'll get to the target. But if the stock is printing big bars like this, running hard, without any red bars, without any pausing or any, you know, pullbacks into close to the target, that's when you want to trail it tight, because you don't want to give back a lot. This is called a momentum move. A momentum move is when the stock goes in a, like a, you know, a momentum move, unidirectional move, just non-stop, right? Those are wonderful. But if you don't get out at the right time, when they reverse, momentum moves leave no support. There's no support. So they leave a void behind. And so when it drops like a rock. It can. And so if I see that my play is running up into target or dropping hard into support or into my target, then that's when I get out. Okay, or I go bar by bar. Alright. Question for the CCJ. You mentioned that the stock had already triggered, but you still might call it. If it has triggered, why should it still be considered? Because it's not too far from the trigger. You know, the trigger should have been over this bar's high, over 2025. Okay, it's at 2035, 2040. So it's not too far from the trigger, and as a percentage of the stop, you know, the stop would be down here. You know, that's very little. We're late, meaning we're late by just a little bit. But if the stock was already up here, then no, I wouldn't call it. It'd be too late. But if it's just, you know, we're just late a little by a little bit, then it's okay to chase it a bit, because it's not too late. Okay? Still. Alright, I think I missed somebody. Okay. I saw Tom say something. Okay, Tom. Oh, hold on. There were a couple other things. Jack also. Sorry, I missed your questions there. And then Tom. So Jack and Tom. So CVS and YUMC. YUMC, I'm aware of it, but I didn't do it. And CVS bottomed on the larger time frames. And then Jack, you have EW and GM. Got it. Let's take a look at all four. So CVS is too extended, but CVS is very nice on the larger time frame. See it? Look at CVS. And then Walgreens also, WBA, bottomed. Walgreens is a little too late, but CVS, that's a nice rounding bottom. It's late, too late, so I am aware of it, but I'm not going to jump in up here. I should have jumped in somewhere here on the breakout. I didn't do it. So I'm watching it, but not ready yet. And then YUMC, I think, isn't it? The one you asked about? Yeah. YUMC had a gap up like last week or so. Yeah, 2 weeks ago. And then a pullback, but it's just too sloppy. Otherwise, I like it. Looks higher, especially on the weekly, and the monthly is at all-time highs. Definitely looks higher, but it's not a swing type play. It's way too sloppy, too big of a stop, but does look higher for sure. Okay, so those two look higher long term, but not short term. They're too difficult. EW is damaged. See that pullback here? First, it came from a double top. Number two, it's below the 20. Number three, it tried to go higher here and failed. So this gives us now a lower high, lower than the prior high, which is lower than the high before that. And then now we have a lower low. So this stock is actually in a downtrend on the daily chart. Shouldn't be played based on the daily chart. The weekly is pretty good, but we need to confirm the entry on the daily. So this is not, I don't think that's good enough. And GM, I can't read it. See how the 20 is totally flat and it's crisscrossing price? I don't mind a flat 20 when it's under price. When it's above price, then I know to short it. But when the 20 is going through price, meaning price drops below it, above it, it means it's completely neutral. It means it's not a long, it's not a short, it's completely neutral. It should be stayed away from or played as such. Played as a neutral play, meaning short the top and buy the bottom. But that's hard. That's not my style. I don't do that kind of play. Okay, but it's completely neutral. Okay, when you trail bar by bar, do you move the target to get more? No, I don't move the target, but if it keeps going beyond the target, then I hold it. Because sometimes, let's say, you say, okay, well, my target is $50 right here. And you start going bar by bar, and then the stock just goes through the target, what you thought was going to be the target, and it keeps going. So sometimes that happens too. You just go bar by bar and you end up actually making more than you expected had you just closed out of the play when it reached target. Now in the tracking sheet that I share with you, what was I gonna say? Sometimes the play actually, I don't get out of target. I end up making more than the target because of what I just told you. I trail it and it keeps going. But if it reaches the target, I just record it as though it was exited at the target. But sometimes I can tell, I picked 50 a month ago or a week ago, and I can see that the stock is going to go through it. I can see based on the market environment, based on what the stock is doing, maybe based on the sector, based on the way the stock is behaving, I can tell it's going to exceed it. And there's no time to send you an alert and tell you, oh, cancel the exit at 50. So I might keep it and make more than what the intended target was for the play. Okay, but rare. That's kind of rare. Okay, question. I had a question. EHTH. I mean topped out. I mean not EHTH. ETH. I mean Ethereum. It's no good. I mean, let's take a look at it. It's no good. Alright, let's take a look at it though. Is this the daily? Yeah, that's the daily. Here's Ethereum. And here is the daily chart. I mean, we have to be reasonable. We have to also read things objectively. So remember, if you get a buy setup and the buy setup fails, which is the case here, see the pullback? And the buy setup failed, you automatically have a downtrend. You don't even have an uptrend anymore. Why? Because when a stock attempts to go higher, so you're getting a pullback, let's just say, getting a pullback like so, and then it tries to go higher and then breaks under that pivot. Guess what? Now you have, that's the highest high. Now you have a lower high. And when you break under that pivot, you have a lower low. Automatic downtrend. So right here, see how it tried to go higher and failed? That's an automatic downtrend. Now, this is kind of a, okay, it's a downtrend, but it doesn't have lower highs and multiple lower highs and lower lows. But it still shouldn't be played long. Not that sometimes, okay, I could, like the stock, or in this case, the cryptocurrency might go back up and prove me wrong, but I would never play that long, because again, it just failed right here. It proved to me that failure made the stock go, or the cryptocurrency go in a downtrend, but it also proved to me that the sellers are stronger than the buyers. It just failed. Why would I want to get in it when it just failed on the last bullish setup right here? Does that make sense? So I would definitely not play it. Now, let's take it a step further. Let's take a look at the weekly chart. Isn't that a good looking short based on the weekly? Isn't that a good looking short based on the weekly chart? It is. It really is. Look at that. So that's actually a good short, not a good long. But, it was hard to get in it. You know why it was hard to get in? I was in it already. Remember last week I told you I had 2 coins and I covered 2. And I had 4. I covered 2 and I kept 2, but I ended up getting out of the other 2 because look at this. I just want to show you what it did. I mean, look at this. Look how much it rallied. I was in a short, and so it felt like it was just too bullish compared to Bitcoin and the other cryptos, and that sell setup right here on the 4-hour chart I didn't take 2 days ago because it was too strong. And that was actually the good entry. So from there, that's 4,200. It's at 3,380. So At any rate, so Ethereum I think looks lower, not higher, and so does Bitcoin and every other cryptocurrency just about. Here's Bitcoin for you. So I don't think it's a good idea. I don't think it's a good idea to get in cryptocurrency long. Here's the monthly chart of Bitcoin. I mean, here's logarithmic. That looks like a good short, right? I tried to short it at 48,200. There was a sell set up, but I didn't get triggered. It didn't trigger me in, and I had to leave the house yesterday, so I didn't chase it. Basically, I wasn't around. That's why. But I tried to short it at 48,200 or so. That's a nice looking monthly chart as a short. It's a little late now, but we'll see. And then the daily, we have a big top. I mean, just a big rounding base that breaking down, and then on the let's take a look at the weekly. The weekly doesn't look good either, so I don't like the cryptocurrency right now at all. Okay. So Ethereum and the other stuff I don't like. VRM. Let's take a look. VRM or IRM. But I'll take a look at the IRM, guys. Sucks, doesn't it? I called it long right here. 1, 2, 3, triggered, and then 2 days later, I raised the stopped. But if I didn't raise the stop, it would have stopped already under the Sparse law. Why did it shake us out like this? Because of the crazy volatility that we had in the market. And look what it's doing. So I had a lot of plays like this last week where they were good, but because of the 2-3% drops in the market and rallies, they got stopped out. Only for them to work later on. And I didn't get back in it because now, the initial play on it was right here long, stop right here, tight stop. If I were to get back in it, look at the size of the stop, so I just didn't do it. $2 stop. Okay, question. VRM over 41.14. I don't see the setup on it. On the VRM, Todd. VRM, you have a declining 20 MA above. What I like about it is the range expansion. I mean, the big bottoming tail. So it might still work, but even if it does, check it out. Long, where's your stop? Right here. What's your target? Right here. Only 1-to-1 reward to risk. It doesn't have the reward to risk. And if you look at the daily chart, you got the declining 20 above, you have the 200 above. I don't know. I just don't see it. Okay. Let's see. So for the new long entry, because it failed the first time, what needs to happen? Another failure to the downside? Correct. Another failure to the downside. Perfect. So let's say you're looking, that's exactly right, J&J. You're looking to play, check it out. You're looking to play the stock long, I mean, on a breakout. And then maybe it triggers and fails. Breaks down now. Goes back up. Bases. And you say, okay, the breakdown failed. Then I can redo it. Does that make sense? Or, maybe a better example, let's say a buy setup. The buy setup fails. The stock goes in a downtrend. When can you get in it? When the sell setup, you get a sell setup and the sell setup fails. Now you can get back in it. Or you can do it on the next entry. Would be better. You see this failure, and in the next buy setup, a higher low. You could try it. So right, we want now positive proof that the bearishness has failed, is ended. So exactly right. So the question is, so for the new long entry, because it failed the first time, what needs to happen now? Another failure to the downside. Exactly right. Another failure. Okay. SIL and SILJ. Let's take a look. Targets. Sure. SIL. Oh, wow. That's pretty nice. You asked about it last week, didn't you? Man, good job. So SIL target, very clear. There's only one target, $51.35. So somewhere here. Just basically the Sparse high. Let's just say $51 on the SIL, and then the SILJ, I'll take a look. It's the same. SILJ is a little bit weaker, so you can see it's still at that prior high. Let's take a look at the SIL. SIL is well above it. See this? Well above it. So the SIL is much stronger, but they're both probably the same thing. This is junior silver, the other one is, I guess, a senior silver. So target is the prior high, 1885, but somewhere in that area. So it doesn't have to touch the exact high before you get out of it. If it gets to 1850, I would start tight, playing it, trailing it off the 5. Get really tight with it. Okay, good job, nice play. If you scan stocks on the weekly and you get multiple red bars in a row above the 20 MA, at what point is it a good setup? Do you wait for the 20 MA to curve up? Yeah, let's take a look. Yes, I want the 20 MA to curve up. So NVIDIA weekly, that's right. I mean, that is already good, but the problem with it is this is okay to play right here over this week's high. So you let this week completely go. You wait until next Monday before you can play it over this bar's high. Stop right here. But the problem is you don't have enough reward to risk. So what I do is I wait for the downtrend to end on the daily chart. So as soon, let's say the 20 catches up, and then you get a sell setup here, and then it fails on the sell setup. You can play it over here and put the stop right here rather than all the way down there. So okay, and Microsoft probably the same thing, but let me just show you something real quick. This is a bit, I don't want to confuse you. You might get a little bit confused here, but I'm not trying to confuse you. But when we're looking at multiple time frame alignment, this is what happens often. So you have a buy setup is when you have a move up. Hold on, let's just redraw that. A buy setup forms when we have a move up like this and a pullback. Get a pullback. 3 or more, doesn't have to be 3, it could be 4. And then let's say we have a small bar, as I like to see always at the bottom of the pullback. I like to see a small bar, and then you get a move back up like so, right? And so the trigger for a play like this, for a pullback type play, a buy setup, is when price takes out the last bar's high. The stop is under the pivot, the lowest low, between the last 3 bars, whatever it is, it's the lowest low. Okay, the target is the prior high. But the problem is when you're looking at just one time frame, that's fine. But when we're dealing with multiple time frames, which we always are, you have to make sure that if there is a downtrend on the smaller time frame, so let's say this was the weekly, W for weekly chart, you want to make sure that the downtrend on the daily, because when the stock on the weekly starts to pull back, it often goes in a downtrend on the daily. If you have lower highs and lower lows on the daily, like so, then you want to make sure that trend is ended first. You don't want to be playing a stock long if you have lower highs and lower lows on the smaller time frame. Okay, which we have on the NVIDIA. We have lower highs. Here's the highest high. Here's lower high, and lower lows. These are 3 lower lows right there. So if you have lower highs, lower lows, what I do is I wait for that downtrend to end. How does it end? There's 3 ways it ends. One is the stock just out of the blue pops really hard, which is rare. It usually doesn't end like this. If it pops like this, then you can do the next buy setup. You basically let it go and do it long on the next pullback to the rising 20 MA on the daily chart. Okay, so now we're talking about the smaller time frame, no longer the weekly, so the daily. Or sometimes, the trend, how does it end? You get a sell setup failure, meaning, that pivot does not take us to new lows, but it stops short of reaching the prior low and goes up. In which case, you would have one higher low and one higher high. So you play it long right here. And you put your stop under this pivot, higher low. So here we don't have a, you always have to have one higher low, one higher high. So here, how many higher lows do we have in this example? How many higher lows? We don't have any. We just have one higher high. That's why you can't enter here. You have to wait for a pullback. Over here, this low is higher than the prior low. So we have one higher low. And once the stock takes out this pivot, we would have a higher high. So it would be okay to do it. So this is called a sell setup failure. So it'd be okay to do it if you get a sell setup failure. The third way is if you have that channel downtrend and the stock kind of accelerates, drops really hard, multiple bars down into support on this time frame, the next larger time frame, which is the weekly chart, then don't wait for the downtrend to end, because by the time the stock breaks the downtrend on the daily chart, it'll have rallied already too much. So you just buy it over the last bar's high somewhere here if it goes climactic. So there's 3 different ways to play a stock that's pulling back on the weekly. So you wait for the downtrend to end. The downtrend can end through a sell setup failure, SSF right here, in which case you play it just over the most recent pivot high. You put your stop under the most recent pivot low. Or if the downtrend, the stock just rallies really hard without giving you a higher low and a higher high, then you have to wait for the next pullback. Or if the stock accelerates below the downtrend and still looks good on the weekly, then you can just do it long over the last bar's high on the daily chart. Okay? Again, I don't want to confuse you, but those are the 3 ways that you can play a pullback on the weekly when the daily is actually downtrending. Sometimes the weekly will be putting in a pullback like this, and the daily is not downtrending, meaning the daily doesn't have lower highs, lower lows. The daily looks maybe like this, just, red bars also, but doesn't have the pivot highs and pivot lows. If that's the case, then wonderful. You can just play it as soon as the weekly chart triggers without paying attention to the daily. You only want to pay attention to the daily if there is that downtrend, that lower highs, lower lows, because we always want to have multiple time frame alignment between the weekly and the daily. Or if you're a day trader, between, let's say you're day trading the 15-minute, then the one time frame smaller, which is the 5. Or if you're trading the 5-minute, maybe then the 2-minute. So you always want to have the one time frame smaller, needs to be in alignment with the time frame that you're currently looking to play it. Okay? Tesla, I don't have any ideas on the Tesla. I mean, it looks really bearish, but is at support. And it's extended, so it's not a short, but it's not a long on Tesla. I mean, it just isn't. Not a short, not a long. It looks lower. It will only hold here if the market rallies. If the market rallies, then maybe it will hold support. But otherwise, Tesla looks lower to $400 to the prior low. Okay. So I don't have any any plays, or I'm not stocking Tesla. As a short, it should have been done like right here or here, but it was too difficult. And it's not a long, it's bearish. You got a declining 20 above. It's really weak. But it's at support. So what I'm saying is, it might hold, but only if the market, I think, gets bullish again. Otherwise, I think Tesla is headed down to $400 or so. Okay, or somewhere there, at least maybe 500 at least. 500 right here, but even 5, I think 400. All right. Let's see. You already discussed Bitcoin. I did. Was the prior high back in January at the bottom at 42? No, I don't think so. I mean, I closed. No, I still have the Bitcoin charts up. Here it is. So Bitcoin, the prior high in January. I don't know. It's hard. So look. So this is the prior high. Okay. Usually the prior high is a good support area if you have an uptrend. So here it is. Here it is. And you say, okay, the prior high. Wonderful. Long off the prior high. but that's no longer an uptrend anymore. You know, that's a big rounding top. So I don't know that this is gonna hold. I think Bitcoin is headed towards like 31k, the prior pivot low rather than the prior high. So it might bounce a little bit off the prior high. To tell you the truth, I couldn't short it because I missed it. It's not because I didn't get a fill and I left my place on the weekend yesterday. But I do have, I know they didn't get filled. So I did have overnight, I did have a few orders for Bitcoin, as you can see, at the January high, like you said, but just only for a bounce back, like just a counter trend play, a short term play, and then I was gonna buy some half a coin at 40,000, 39, 38, 36, whatever, in case Bitcoin dropped really hard. I was gonna play it for a bounce back up, but it didn't, so I'm gonna cancel these orders. Okay, so my point is, yes, we might get a bounce back up, but I think it will be short lived. You see what's going on here with Bitcoin? Look at the top that we got, and notice the little breakout failure right there too. But look at the top. This is no longer a V pivot. It's not a small pivot. Okay, it's not 3 to 4. This is months and months worth of basing, and then it broke down. So I think we will probably get a bounce, and then there will be another drop to 31,000 or so. I think that's what's happening. That's what's gonna happen. Okay, to that 20 MA on the monthly, which right now is about 20,000. But between now and the time that Bitcoin pulls back, I think it'll be, somewhere around 30 something thousand. That's what I think is gonna happen with Bitcoin. Okay. All right. Okay. All right. Let's take a look. Longs, EVR, CNDT, and CNDT shook us out last week. Let's take a look. So hold on. EVR, CNDT, ATKR, and then shorts EH. Got it. Bitcoin doesn't, Tesla doesn't have 1 to 5 billion of Bitcoins junk, and should go up in flames quickly. All right, bro. If you think that, you think the market doesn't know that stuff? You think you're smarter than the market? I'm not smarter than the market. Nobody is. So Tesla doesn't have 1 to 5 billion Bitcoins. There's only 21 million in circulation. There isn't even 21 million in circulation. The most amount of Bitcoins that will ever be mined is 21 million. More than half of them are not even in circulation. Tesla has bought $1.5 billion worth of Bitcoins, not coins. 1.5 billion Bitcoins would be, we're talking in the trillions of dollars. So okay, so it's not 1.5 billion Bitcoins, it's $1.5 billion worth of Bitcoins, which isn't a lot. Okay, and it's already up a lot on that trade anyway. They bought Bitcoin when it was around 30,000, I think, and they sold 10% already. Okay, all right. Oh, okay, no problem. Okay, that sounds good. But and I agree with you. Tesla does not look good. This is higher. This is bullish, but it's not a good setup because you can't use this as a stop. You know why? Because this is a base. Like a 1, 2, 3 is when you have an uptrend, and you have a 1, 2, 3, right? This high is equal to the prior high, and that high low is equal to the prior low. So that's not a 1, 2, 3. But you can play it as a base breakout over the base with a stop right here. So it's a big stop, but it looks higher. Yes, agreed. CNDT, I'm not sure. It's a buy setup, but I don't like it that much. ATKR looks beautiful over the red bars high. This one is, that one I'm interested in. ATKR. So thank you for mentioning it. It looks good. R to R, reward to risk, not very high. Entry, stop, and target. What's the R to R on it? 1.5 to 1. At best, 1.5 to 1. Okay? At best. And then EH, lower. Yeah, right. But we played it lower. It didn't work. I mean, it didn't follow through. But it does look lower. Agreed that it looks lower on the EH. Do I prefer the weekly chart versus the daily chart for Bitcoin? No, no, I don't prefer the weekly to the daily. I just like to look at multiple time frames to make sure I have a good grasp of the picture of what's happening with the stock, or in this case with Bitcoin. But for swing trading, I like the daily chart the most by far. The weekly is too big of a time frame. Okay, KPTI, too strong of a rally. I'm aware of it, but I thought it was too strong of a rally. Yeah, it is. Notice this is a higher low, and then it's already above the 20, and it got to resistance. It should have fallen already. It's basing at resistance. So to me, KPTI is a little too strong here. I wouldn't do it. I wouldn't redo it because I already did it. UPS. So Peter, would you sell your Bitcoin right now, betting on a repurchase later? The problem, Peter, is that you're late. You're like my brother. My brother has one coin, and it's too late to sell here. It's not too late, but it's really late. And so he asked me, and I said, I don't know. It's late now. You should have sold it at 50,000 or so when it started to break down, when it broke under the daily pivot. So it's hard, Peter. It's always the hardest question I get. Always is something like, let's say something like this, EH. Or no, not even the EH, but basically this is the hardest question I can get. Actually, I got it on the PNTX. I'll tell you about it in a second. Somebody bought 300 shares at one. I don't remember exactly the price, but 110 or so, like over here. Is that right? No, I'm sorry. One here at 130, let's say. 300 shares, somewhere here. And the stock was falling like a rock. And I got asked, is it, what should I do? I'm down, he was down $10,000 on 300 shares, okay? Down $10,000. And what should I do? What do you tell them? Like, what do you tell them? I don't know which day I got asked, but it was somewhere down there. What do you tell them? You tell me. Put yourself in my shoes. What would you say to somebody that bought it at the highs and it's falling like a rock? What would you tell them? So what would you tell them? Get out or stay in? The question is, get out or stay in? Get out or stay in? Get out and save your capital. Reggie. Okay, what do you guys think? What should the right answer be? Get out fast. Okay, this is the and look what it did. I just want to show you what it did. Okay? And, look where it's at now. But the point is, we as traders, we have to get out. As traders, we have to get out as soon as it becomes clear that whatever it is we try to do is not good. As soon as the pattern fails. Let's say, you try to play the breakout over here and it failed. Okay, get out. Get out here. But if you wait a lot and the stock keeps falling and you get out, okay, well, let's say you got out at 80 and it went down to 40, you'll look back and say, it was a late exit, but I sure am glad I got out. But sometimes stocks don't crash and go to zero. Sometimes what happens is it drops a bit and goes back up. And so when I get asked whether somebody should stay in the play or get out and it's already really late, then I just say, I don't know. It's really late. It might continue, it might drop some more. But if I tell them to get out and then a couple days later it bounces really hard, I'm going to feel terrible. I remember one time I got an email question from somebody whose both parents worked for Hewlett Packard, HP, and the stock, I mean, literally looked like this, literally looked like this on the daily chart. It was at $14. No, it was at $17. It was at $17 when I got asked. It dropped from $39 or $40. I think it was $39 to $17. And he said most of their 401k is in this stock because they both worked for that company and just retired. What should I tell them to do? And I said, I didn't know what to say. I said, it looks awful, but it's extremely late to get out. So it's up to you. I don't know what to tell you. Okay, HP dropped from 17 to 14 and then shot right back up. Now, if HP had dropped to $5 and I told him, no, stay in, let's just say I told him, no, stay in, stick with it, getting out at 17 as opposed to $5, 17 is a whole lot better than $5. But if I told him to get out at 17 and it bottomed at 14 and then it shot right back up to 30 or whatever, then that was not a very good exit. The point is, it really behooves us to enter and exit at the right time. Because if we don't do that, if we try to exit later, when it's really late, then we're setting ourselves up for frustration, for just total agony. And this is what happened with I don't know what that person did with it, honestly. I don't think he's in the room anymore. But I got asked about it one of those 3 days. I don't remember. And I told him what I told you just right now. It looks lower still, but it's extremely late to get out. So I didn't tell him to do this or that, because it's impossible for me to know. If he had asked me, let's say right here, stock was breaking down. Okay, get out. Your loss is still very small. But if you ask me down here, you're down $50 on it, or however much, $40. Now I don't know. Now I don't have an answer for you. And whatever answer I can give you would be wrong. I have to qualify it. I have to say it's late, but it still looks lower. Does that make sense? All right. On UPS, I'll take a look at UPS for you. UPS, it's too extended, but okay. I have it and would like your opinion for a stop. Sure. Or either 210.36 or 5 minute low. So you have it as a swing. Like, when did you get it? Look, if somebody were to say, if you were to tell me, oh, I got it here, and I'm looking to hold it long term, then of course I would tell you to put the stop right here. Oh, was it as an earnings play? Yeah, then that's where I would put the stop, Reggie. Now, if you absolutely don't want to give anything back, then it's very clear. The stop should go under 215, under today's low, 215 on the UPS. If you don't want to give back much at all. But if you're okay giving back a little bit because you're in it from all the way down here, then I think, this would be a much safer, meaning much more unlikely to get taken out. 210, much safer place to put your stop. 210.30.29 is where I would put it. Okay, amazing play, Reggie. Good job. And I didn't mean to offend you or anything, Uncle Rain. I just meant, the market is like, the market has all available information gets immediately discounted into the price of the stock. So Tesla's Bitcoin position is already discounted into the price of the stock. Okay, so that's why So that's what I'm saying. We can't say, oh, because of Bitcoin, Bitcoin is junk and Tesla has a lot of that junk, it's gonna fall for sure. My point is that is already a publicly disclosed information, and therefore the price already factors that information in. I mean, the stock factors the information into the price of the stock. The market factors the information into the price of the stock. So unless you have information that's not publicly known, you can't really use publicly known information to try and project where the stock is going to be based on that already known information. Because again, the market is the greatest discounting mechanism there is on planet Earth. It immediately discounts whatever publicly information, whatever known information there is, discounts it into the price of the stock. And so that's why it's extremely hard to outsmart the stocks in general. Okay? It's extremely hard. This is why I don't believe in reading the news. I don't read the news. In fact, half of the plays that I trade, I can't even say the name of the play. I don't even know the name of the company. I don't know anything about what they do. And I can still make money. Because I'm just basically reading the price action objectively. Okay? Alright, so where will Ether fall to after the pullback? I did close out of there, didn't I? Yeah, I did. But I can reopen it. I can, take a look. Ether, let's take a look for you. What I think would be the target for Ether. So Ether, I think 2600 maybe. But I'll take a look real quick, okay? So that's the daily chart of Ether. So the support, like I can let me look at it on my other. 1 second. Ether, it's kind of easy if you just that's the daily chart. So the next support area we know is here somewhere in this space right here. So the bottom part would be about 2000, the upper part would be about 2400, and if you want to make it easier, just go to the weekly chart, and that's the 20 MA. I mean, wherever the 20 MA is where I would expect Ether to drop to. So I would say for now around between again 2000 to 2400 bucks on Ether is where I would expect it to drop to. I know what some of you are thinking, that I'm crazy and that there's no way it's gonna drop another $1,000+. Well, then who's the crazy person? Me that expects the stock to just drop to here to 2600, or when it actually just was at $78. I mean, it's not a stock. It was a $78 cryptocurrency just a year ago. It went to 4,000 for something, 4,000 plus. That's crazy, and yet it happened. So just a small pullback to 2,000 bucks or to 2,600 is not out of the question at all. This was a $78 currency, $78 per share just a year ago. Okay, so yeah, when I tell people, oh, I think this will drop a couple $1,000s or so, they say, are you crazy? There's no way. They don't remember. They don't know that it came from under $100. Does that make sense? So yeah, that's where I would expect it to drop to, between $2,000 to $2,400. All right. Okay. Did I miss any questions? That's a great. I always thought to myself, it's not working now. Maybe it's failing, but if it works, and then I keep holding until they hit the stop. Still trying to get over this, but getting better. Okay, great, J&J. I'm glad to hear. Today's earnings play, Monday close, GOEV short. I had a few ideas, and to tell you the truth, the two favorite ideas were the Clever and the GOEV, but I didn't take any plays. So those were my favorite ideas. I don't know what they're doing. I can check. Clever is it probably hasn't reported yet, so it's still flat, and then GOEV is down to 7, gapping down a little bit in the post market 725. Uh, so what's the question on it? Yeah, it looks good lower. Yeah, it looks good. I think, hopefully gets you down to about 650 or so. Would you believe if I told you, remember on Friday, not a single play worked on Friday? So yeah, it's gapping down 725. It's too small of a gap. But I think, hopefully it ends up gapping more tomorrow. And then you get 650 is what I'm thinking, Reggie, okay? But hopefully it gaps a little bit more. It's too small of a gap right now. Would you believe if I told you on Friday? Would you believe that on Thursday, when I picked the earnings plays for Friday, was it? So Thursday we picked for Friday. Yeah, Thursday I picked for Friday. So on Thursday I had two. Each watch list I can only fit on my platform, other platform. I can only fit 50 items per watch list. So I had two columns of watch lists. I went over the first column, and there was only 2 or 3 left on the other column, and I forgot to go over it. And what was on it is SLDB, which meaning I ended up not calling this and not playing it as an earnings play. Would I ever pass on something like this? No, never. I would have actually done it with 25k. So every other earnings play failed, but this one would have worked, but I missed it. Crazy. And it dropped 20+% on Friday. So it would have fixed the day almost. But yeah, Friday was a bad day for the earnings plays. I think every single one of them lost money, I think. Okay. So Friday I didn't call any plays, and today I didn't call any plays. I'm just watching. The market is too sloppy, and I feel like the earnings plays are going with whatever the market is doing. I mean, if the market gaps up, most of the earnings plays gap up. The market gaps down, most of them gap down. I don't want the earnings plays to be dependent on the market like this. I want them to be independent. So I'm just taking it easy right now. I'm not taking any earnings plays. Okay. Let's see. I think I have undisclosed. If Bitcoin is so dependent on Musk's comments, it shows how weak in turn it is. That's good thinking. That is very good thinking, by the way. If Bitcoin is so dependent on whatever Elon Musk says, then it shows how weak really it is. Okay, I'll tell you something else. It's actually a step further. Bitcoin has nothing to do with, it's not dependent so much on what Musk says. It's just that Musk's comments happen to coincide with Bitcoin being really bearish. For example, whatever he said on it on Friday, yesterday, on the weekend, it was already breaking down. So his comments just gave it kind of a nudge. But look at this, it was already breaking down. It was already bearish. So his comments, helped it, gave it a push. But rarely does somebody's comments, no matter who they are, Buffett or no matter who they are, rarely would they move a stock, or in this case Bitcoin as a cryptocurrency, for more than just a knee-jerk reaction for a day or two. But long term, it's not going to depend on what somebody says, no matter who that person is. It only depends on supply and demand. And right now, there's just too much supply. Clearly, look at all this base. So his comments, there will be a knee-jerk reaction because you get a flurry of selling or a flurry of buying based on his comments. But it's not gonna lead to sustainable selling or sustainable buying, no matter who that person is. We've seen pretty smart people over time say stuff about the market or certain stocks, and the stocks would react dramatically for a day or two, and that's it. Okay? So that's what I think. All right. So do you think Bitcoin will become a global reserve currency to replace US dollar? What about your brother? I think it can. Even my own brother, I can't really help him much. I have to get out here. If I'm in it, I have to get out quickly. If he wants to give it more room and to see what happens, then I can't help him at that point. Then it would be too late for me to tell him to exit at 43 when he should have exited at 55 or whatever it was, or under this pivot. So that's the thing, Drew. Even my own brother, I can't really help if he's not going to follow my own system. Because if I try to help after the stock is already, or the cryptocurrency moved a lot against him, then I could also be doing him a disservice. What if this ends up being the bottom? Does that make sense? But the question is, will it be a reserve currency? I don't think it will ever be a reserve currency. I don't think it will ever be a reserve currency. Okay? For many reasons, but for many reasons, but mainly because it's who controls it? In order for it to be a reserve currency, you need like government control. Not some, like, a few individuals owning more than 50% of it, right? It's too, it has no backing, like, other than, we need to have some institution that says, okay, I am backing this up. It has no backing. It's too volatile. It's too speculative. Again, it's controlled by certain individuals, some of whom have no known identities, publicly known identities. Does that make sense? So I don't think it will ever be a reserve currency, but I think it opened, I think it's going to lead to something interesting in the future. Will it lead to other digital currencies in the future becoming a lot more, becoming a reserve currency, or becoming a lot more efficient than the US dollar? Sure, maybe. But look, governments don't tolerate threats. They don't take kindly to threats. If the US dollar were ever to get threatened by Bitcoin, they'll just shut it down. They will ban it. I mean, it's just that easy. They will just ban the cryptocurrency. They will issue I don't know what kind of an order it's called to the US crypto exchanges, banning trading that in cryptocurrencies. It's simple as that. And it's gone, overnight gone, wiped away almost. There will still be markets and exchanges that will allow it to trade, but not in the US. Does that make sense? So, trust me, nothing is going to threaten the government's own currency and be tolerated. It's not going to. Okay? For now, it's fun. It's, it brings maybe a lot of revenue to the government. Okay, let's keep it. It's where the government is the US government acts as a capitalist market until it no longer serves its purpose. Then it's no longer a capitalist market, or a capitalist government is what I'm trying to say. It will say and proclaim to be a capitalist government until it no longer serves it. And then, have you ever noticed that? And then as soon as it no longer serves it, then all bets are off. They'll do whatever they want. Yeah? So that's what so I don't think Bitcoin is going to be a reserve currency, or that it's going to replace the dollar like some people speculate. It will lead to other, digital, like blockchain basically. So it's not so much about Bitcoin, it's about the blockchain technology that banks will start to use. They're already using it, and develop it. For example, you can't wire money after certain, after 5 o'clock East Coast time, or on the weekend. You have to wait until the Monday. Well, in the future, let's just say I have a strong feeling that it'll all be instantaneous, like it is right now on using the blockchain technology. At any time of the day, of the night, doesn't matter. So I think blockchain technology will always be there. Bitcoin, will it always be there? I don't think so. Maybe, but it will not develop into a reserve currency. I don't think. All right. Right. I mean, they will. BK. That's right. I mean, they will shut it down for like, for example, the Fed, the Federal Reserve. They have their own. Congress is already, has a charter or of rules for the Federal Reserve. During the pandemic, you think they followed their own rules? By law, they did things that they were not allowed to do. But desperate times call for desperate measures, and they will just break the rules and the laws without any consequences because if the situation gets out of hand. The same with the US government. They will do whatever suits them, whether it's they'll change the law. Who do you think writes the law? They'll change the law overnight if need be. Okay? At any rate, let's take a look. Check out KL and AEM. KL I didn't like, even though it's been really hot like all the other gold stocks because of the downtrend on the weekly. So I didn't like it so much. But anything gold, if you bought, it's doing well. Anything gold. I mean, these are not necessarily special. Better than these two is the HL, which I called last week, but it stopped out. I raised the stop and it stopped out. Look at this. All-time high, I think, or I don't know, maybe not all-time, but 10-year high. But it's just basically it's the sector that's doing well. Okay, all right. I gotta get off the mic. But I hope, NEM is one of the strongest actually. NEM is incredibly strong. It is at the all-time high, I believe. Yeah, it is. Look at the NEM. NEM is like the strongest gold mining company out there. Yeah. Yep. All right, guys. Hope you enjoyed today's discussion. We kind of went off topic a little bit, but it doesn't matter. I had the time, and you guys had the questions. So I hope you enjoyed today's session, and then I'll talk to you next week. If you're in the room with me, I'll speak to you at 9 a.m. in the morning. If you're in the other room,